Good afternoon, ladies and gentlemen. Welcome to the 2013 interim results presentation of TCL Multimedia Technologies Holdings Limited, TCL Communication Technology Holding Limited, Tony Electronics Holdings Limited. Now let me introduce to you the management representative. From TCL Multimedia, Mr. Hao Yi, Chief Executive Officer. Mr. Edmund Cheng, Chief Financial Officer. From TCL Communication, Mr. George Guo, Chief Executive Officer. Mr. Thomas Liu, Chief Financial Officer. And from Tony Electronics, Mr. Gary Yu, Chief Executive Officer. Mr. Ren Shenong, Chief Financial Officer. I'll now pass the time to the management of TCL Multimedia to start to take the presentation today, please.
Thank you. First of all, welcome to the TCL Multimedia 2013 interim results presentation. Next chart, you will see the standard disclaimer statement. Today's presentation is divided into 4 parts. I will cover the results overview and financial highlights, while our CEO will present the business review and the outlook for the remainder of the year. Results overview. Before I present the results overview for the group, today is a very special day. I would like to take this opportunity to announce that our former AV business unit has just been listed and start trading on the main board of the Hong Kong Stock Exchange as Tony Electronics Holding Limited. Ticker symbol 1249. For every 10 shares of TCL Multimedia, our shareholders have received 1 share of Tony Electronics. Because of this successful spin-off, the company has classified Tony Electronics business as discontinued business and hence stop consolidating Tony Electronics. The financial, therefore, presented today reflect this accounting treatment. Turnover for the first half of 2013 was 18 billion, which is up 22.4% compared to same period last year. This also marked a major milestone in which our revenue growth is higher than our volume growth of 20.7%. Gross profit was Hong Kong 2.84 billion, up 8.7% year-on-year. The second quarter usually is the slowest season for the whole year, and also marked a very important product transition for the company's China operation, with the introduction of 8 series of new products all at the same time in April 2013. Net profit for the group was Hong Kong 271 million, which was down 8.8% when we excluded the 144 million one-off gain from the acquisition of TOT in Q1 last year. Net profit for the continuing operations was 195 million. Profit attributable to owners of the parent was Hong Kong 254 million for the group, down 12.7%. Profit attributable to owners of the parent from continued operations was 193 million. This chart, you can tell that for the first half of 2013, overall LCD shipment grew by 20.7% to 7.8 million units, which was much higher than the overall market growth rate of 4.2%. Shipment volume for the China market grew 36.1% to 4.5 million units, almost double the China market growth rate of 18.4%. While shipment volume for the overseas market grew 4.4% to 3.28 million units, much higher than the relevant market growth rate of 1.2%. We continue to improve our product mix of smart and internet TV, as well as the 3D TV in China. For the month of June 2013, smart and internet TV and 3D TVs have reached 86% and 31.3% respectively. Next, financial highlights. For the first half of 2013, we recorded a turnover of Hong Kong 18 billion, up 22.4%, compared with same period of last year. Gross profit was Hong Kong 2.84 billion, up 8.7% year-on-year. Operating profit was Hong Kong 331 million, down 31.5% year-on-year, excluding the one-off gain from the acquisition of TOT. Profit attributable to owners of the parent reached 254 million for the group and Hong Kong 193 million from continued operations, representing a reduction of 12.7%. Basic earnings per share was 90 cents for the group and 40.5 cents from continued operations. Regarding interim dividend, on August 13, a few days ago, the company had distributed special dividend in the form of distribution in specie. For every 10 shares of TCL Multimedia, our shareholders have received 1 share of Tony Electronics. Tony Electronics is trading today as a public listed company. The valuation of this very special dividend will be determined using Tony's net asset value as of July 31st, 2013. Since Tony is a public listed company and has not published their third quarter results, we therefore use Tony's June NAV of 376 million as a reference point, divided by the 1.3 billion shares of TCL Multimedia's outstanding shares. This represents a special dividend of 28 cents per share, which is much higher than the 10 cents dividend that we have distributed last year. As such, the company recommended that we will not declare additional interim dividend at this point. This chart tells us the average selling prices as well as profit margins. Quality growth is one of our major goals for this year. We have achieved a major milestone this year in stopping the erosions of ASP for the China market. ASP for the overall group increased by 4.2% to 2,223 Hong Kong dollar, while for the China market, ASP has increased by 4.4% to 2,677 Hong Kong dollar. Gross margin is lower by 2 percentage points. The second quarter is usually the slowest quarter for the whole year and also marked a very important transition for the company's China operations. The market, however, was affected by the unexpected discontinuation of the Chinese government's energy subsidies scheme in May. Hence, delayed our plan in reaching the desired level of new products in our product mix and required us also to step up promotional efforts in selling out discontinued models, which affect the overall gross margin. Expense ratio, excluding R&D expenses, improved slightly by 0.2% to 14.6%. Operating profit decreased by 1.5% to 1.8% for the first half of 2013. Here we have highlighted a few balance sheet items. We continue our efforts in strengthening our balance sheet. Due to the spin-off of Tony Electronics, we have also included key balance sheet items on a pro forma basis as of December 2012 by excluding Tony Electronics balance sheet items. Non-current assets have increased slightly by 2.4% to 29 billion. Inventory has increased by 9.2% to 6.9 billion. Cash and bank balances have increased by 95% to 4.7 billion. This was mainly contributed by the continual positive operating cash flow that we have generated in our business for the first half of the year. Non-current liabilities has been reduced by 21% to Hong Kong 354 million. We have paid off 92 million in interest-bearing non-current debts. Slide 10. This page shows the key financial indicators. Inventory turnover day has increased by 7 days to 58 days, which was mainly driven by the slower than expected sales in June of 2013. Accounts receivable turnover days and accounts payable turnover day have both maintained the same at 31 days and 67 days respectively. The cash conversion cycle has thus increased by 7 days to 22 days. Current ratio maintained at 1.1 times, while gearing ratio still maintained at 0. We also would like to point out that our gross interest-bearing debt to our total equity ratio has improved steadily to 47.8% from 65% in the first half of last year. We continue to strengthen our balance sheet by deleveraging steadily using positive operating cash flow. This slide shows the different segmented performance for the first half of 2013. For our China business segment, overall turnover has increased 40.7% to 12.2 billion, which was mainly driven by 36.1% increase in volume and 4.4% increase in ASP. Gross margin dollar has increased by 17.2% to 2.36 billion. However, gross margin percentage was only 19.4%, a decline of 3.9%. The second quarter is the slowest quarter for the whole year, as mentioned before, and also marked a very important product transition for the company's China operations. The unexpected discontinuation of the energy subsidy program by the end of May had delayed our plan in reaching the desired level of new products in our product mix and required us also to step up promotional efforts in selling out discontinued models, which affect the overall gross margin negatively. The reduction in gross margin was partially compensated by savings in operating expenses, and hence the operating income has been reduced by 7.2% to 439 million. The demand from a number of our overseas key markets, including some European countries and emerging countries in the first half, are below our expectation. Some of our international peers have also started promotional programs in clearing their inventory. Turnover has been reduced by 4.1% to 5.5 billion, mainly due to volume increase merely by 4.4%, and our product mix was below expectation. Gross margin decreased by 28% to 440 million due to the reduction of gross margin in the emerging market as well as in our strategic OEM business. Operating income has turned from a gain of 106 million last year to a loss of 113 million this year. Before I will turn over the presentation to our newly appointed CEO, Mr. Hao Yi, we actually yesterday had a press announcement regarding the resignation of our former CEO, Mr. Charles Zhao. And I would like to take this opportunity to explain that on May 22nd, Mr. Zhao actually had suffered from a sudden health problem, which he was admitted to hospital. And subsequently, Mr. Hao Yi, who was then our chief sales officer, stepped up as our basically acting CEO at that point in time. And Mr. Zhao has just finished operation from an overseas hospital and has just returned back to China to recuperate from his sickness. So at this point in time, the board has decided that this is actually a critical moment for Mr. Zhao to recover fully from his sickness, and also the company could not done without a CEO. So we have actually, the board has decided to appoint Mr. Hao Yi as our CEO effective on August 13. Now let us welcome Mr. Yi to present the business overview and the outlook for the remainder of the year.
Thank you, Edmund. Ladies and gentlemen, good afternoon or good evening. First of all, I would like to thank all of you. With everybody's support, TCL Multimedia, actually in the Q1, we reached truly the number 3 of the TV industry in the world. So it's, of course, with the team's effort, we jumped from 5.8% last year up to 7.3% market share in the world. And also in China, we are about 20%. So it's truly the number 1 TV manufacturer from China. In terms of the sales volume, we sold, for the first half, we sold more than 8.4 million TV sets, including 7.8 million LCD sets. We do have a small volume on the CRTs on the certain developed or certain emerging countries. And within the LCD or LED products, actually, we have improved our percentage of the LED TVs as well as the smart TV, 3D TVs. They, compared to last year, they all reach about more than 70% or even 100% of the growth. In China market, first half we actually reached a operating profit of more than 439 million Hong Kong dollars, and we have been launched 30 series of the new products with 85 models to the market, and including within for the smart TV and 3Ds, they all increased compared to the market share. We all increased more than 30%, 31% of our own. And also the average selling price increased 4.4% as well. On the other hand, we have been also working on our operating expenses. The expense ratio also dropped significantly compared to last year. Sales channels. On one hand, we have been fully, with effort on develop the traditional channels. On the other hand, we have already ourselves, we set up our own, we call it specialty stores or experience centers. We established around 1,100 stores of our own, and then we still have a very aggressive plan for the second half as well. In the overseas market, I think everybody experienced that the first half of the overseas market actually was quite low. And the operating loss is about 113 million Hong Kong dollars, and we sold more than 3.28 million TV sets in the overseas market. And we have been successfully introduced the smart TV into the Europe market and many major emerging countries. And our LED combinations has reached in the history reached 91%, which is very good news. And in certain key countries, we have actually get very good result, such as in Brazil. We got more than 90% of the increase compared to last year. In Australia, we double our market share there. And also in Thailand, we jumped from 5.7 to 6.5. And our strategic OEM business, the first half is a very difficult time for us because the whole world market was very low first half, especially the overseas market. And the second half, actually, we come back in. And in Europe market, France, Poland, these are the key countries for us. We all have increased on the market share. And North America, we have significant improvement in terms of the brand awareness. Products. I think everybody noticed that 3D TV has become very common. Smart TV become also very common. On top of that, how can we actually make our product even better? So we introduced, since last year, the Super Smart TV or Super Smart Cloud TVs, that including the very high spec of the product. It will be dual-core CPU, dual-core GPU. It's like a crazy machine. But that's not only that. On top of that, end of last year, November, we introduced the first crossover product in the market by joint hand with one of the largest online operator, Tencent, Tengxun. So we introduced a product called Ice Cream. And this is truly the first crossover product. And then on top of that, this year early, we introduced the truly high-end product we call Viveza. It's a sub-brand of TCL called Viveza. It is the thinnest LED TV in the world. Or overseas, we call it Blade TV. And so this is our strategy on top of the smart TV strategy. Back in March this year, we had a spring announcement of our product is not only from TCL Multimedia, but also we join hand with our mobile phone team as well as our white goods team, because we believe in the future the smart product is not only smartphone or smart TV. It become a smart system. So the name of this press conference is called Really Different. So actually, if you want to look at the online footage, it is really different. It's a very interesting press conference with a lot of interesting products. Global marketing. I think many of you are aware that TCL has been introduced very heavily of our entertainment marketing and also change our brand image to a more young, fashionable, and internationalized brand image. Ever since early this year of the CES, and at the same time, we have the naming rights and naming on the TCL Chinese Theater in Hollywood, Los Angeles. And we believe, and also, as you know, everybody, when you go to Hollywood, you go to the handprint place, Chinese Theater, and now it's TCL Chinese Theater, is the heart of the Hollywood. And also at the same time, we announced the collaboration with the Marvel and of the Iron Man 3. I think in the movie, everybody, you have seen our 110-inch TV in Iron Man's living room. Of course, the president of U.S. using TCL phone as well. Thank you. We are the only TV manufacturer in China to actually reach the truly vertical integration, which means thanks for the help and the cooperation with our brother company, China Star, which is 8.5 generation of the LCD panel factory in China. Together with the modules or backlights, we reach the vertical line of the integration through the co-design, co-marketing, and then co-planning of the product, and then brings the most competitive product to the market. So this is the key word, vertical integration here. Tongli, this is good news early this morning. So Tongli, our AV business, successfully public listed in Hong Kong Stock Exchange. So we will have our management of Tongli to explain to you the detail later. Okay, thank you. Outlook. Global market. It's good news that globally, you can see from 2013 to 2017, the TV market still maintained a steady growth. However, in 2013, second half this year, in China particularly, we will experience the downstream or the decrease, a certain about 2 to 3% in the market with the forecast. And also in the market like Western Europe and Eastern Europe, like Russia or Ukraine, still have a very difficult time there. Particularly in China market, we can foresee some trends here. Number one, the size of the TV actually become larger and larger. The average size of last year, 39 inches, right now has jumped to 42 inches. And the channel switching from the traditional channel, the chain stores, to the e-commerce channels. Right now, the e-commerce channel has been very much with a high speed increased. We forecast this year, end of the year, it will reach about more than 10% to 12% of the total TV market for the e-commerce. On the other hand, the ultra high definition, we call it 4K, 2K, is one of the trend as well. It's not only on the large screen, but also become very popular from 39-inch up to 110-inch. Unfortunately today, because of the place is not big enough, otherwise we will bring our 110-inch ultra high definition TV here. But we have our 4K, 2K product there as well, so you can experience it. Product, I would like to spend a little bit of time on the volume and also the product. On the volume, our forecast this year, we are still remain our forecast on the 18 million to maintain our leading position on the market share. And speed and efficiency for sure will be the key word. And also affordable innovation is one of our trends for the product as well. But how to achieve this? So vertical integration is one of our methods. On the other hand, global marketing network in China and also in overseas, in emerging markets. I would like to spend a little bit more time on the smart TV. I think smart TV, a lot of you still have a question or many question marks on smart TV. Where is smart TV going? Or where is this industry going? Smart TV is going to an ecosystem. It's not only a hardware, but also together you're going to have software, contents and services together bundled as a smart TV ecosystem. So when we plan this, on one hand, we already have a lot of smart TV products. But on the other hand, you can see the right-hand corner, expansion in the new business. What I mean, new business, it is truly new business. Okay, next. And China. So we will further reinforce our leadership in the China market through the introducing more of the high-end segment of the product with more large size, with more percentage of the smart TVs, and also the brand. We will aggressively to promote TCL brand with a new, young, fashionable, and internationalized image of TCL brand, and also the channel segment. Channel, I would like to say that not only the traditional channel, but also our self-built specialty stores. So end of the year, we are forecasting more than 3,000 experience centers in China and of our own. On the other hand, of course, speed and efficiency. Overseas market, brand is the most important thing because in many countries, TCL brand is still not as strong as in China. So how to introduce TCL brand or how to further increase our brand image and also the market share. So this is a key development strategy for overseas market. And in emerging market and in Europe, we'll continue to introduce our new smart TV products. And in North America, we will maintain a stable growth there. And of course, as well as the strategic OEM business. Back to the smart TV. Again, what is smart TV? We want to have some keyword here. Actually, the English keyword is not cool. You look at the Chinese keyword there. 好看,好用,好玩. Very simple. We would like to bring you the most user experience product to you. And it looks good. It's not only with the design and user interface, but also the contents and also the high definition experience. When it comes to the user experience, not only from the technology point of view, but also how can you play with it together with your phone or with your tablet or with your cutting-edge remote. So these are all the user experience point of view. On the other hand is entertainment, more contents, gamings. So how can you, when you go back home, look at the large screen and transfer the contents from your mobile handset to a better picture quality. So these are the directions or the feedbacks we want to get from the end user. What we're going to do? For sure, we're going to further emphasize our, strengthen our experience or capabilities in the user experience and user interface. Of course, on the chipset-wise, we would like to have further collaboration and, of course, our own development on the chipset in terms of the hardware technology. Operating system, we are also building up the operating system with collaboration with third party as well. Systematic product planning and ecosystem establishment, plus the new business. Next picture, I would like to explain to you more detail. In the future, we believe, at least right now, TV will have two major dimensions. On one hand, vertical integration. That's based on a traditional traditional TV manufacturer. Vertical integration is one of our key competency. You need to have the panel, control the panel resources, and also the whole 9 yards. But that's only on the hardware part. On the other hand, further collaboration with the content provider, softwares, services to build up your own smart TV ecosystem. So in the future, the competition between one company to the other company will become one system compared to the other system, or one biosystem, ecosystem to the other biosystem. So going to be very interesting. So I would like to say, not many, a long time later, or very soon, you will see some really interesting product in the market from TCL and from this system. At the end, operating our mainly ideas, we want to continue to build up our quality-driven growth, so maintain our leadership in terms of the market share, and of course, trying to maximizing our profitabilities. On the other hand, the systematic management and also the industrial capability is what we're going to focus on. Speed and efficiency eventually going to bring value to everybody, to every one of you. Okay? Thank you very much. Thank you.